Hi, and welcome to Oxford Analytica's video briefing. Today we're going to be talking about global oil markets. Now, the price of oil has dropped precipitously since the middle of the year, from about $115 for Brent crude down to about $70, and Saudi Arabia has recently said that they think it may go down to $60 for the rest of 2015. Now, this will have tremendous global consequences for producers and consumers of oil. In fact, one recent report said that about 1% of global GDP could be transferred from producers to consumers as a result of this price drop. However, the impact may be even more extreme in some regions of the world that are particularly sensitive to the price of oil. I'm joined with Alison Baily, who's our senior analyst for the Middle East, and the Middle East is obviously an epicenter for oil production. So Alison, what are some of the specific impacts in the Middle East on this new price development?
Well, clearly the region has been very dependent on high oil prices for well over a decade now, and the key exporters are really very worried about the impact that the drop in oil prices is going to have on their fiscal sustainability. Now, the picture here, though, is still quite varied. We look at countries like Iran, Iraq, Bahrain and Oman, where they have much more immediate concerns, and the drop in oil prices will really bring about some very serious budgetary shortfalls for them in the immediate term. Countries such as Saudi Arabia, Qatar, the UAE and Kuwait, they're in much robuster fiscal position. They have significant assets that they can draw down on, and they also have very strong non-energy sector growth that is happening in their economies. So they're able to ride out this fall in oil prices. However, there is still going to be quite a few sort of longer-term concerns, really, that this fall is going to provoke for them, because these countries are really worried about the long-term sustainability of their economies. They know that that oil prices may well remain low and can continue to decline over the next decade or so, and this is really going to have to force some very serious structural changes in their own economies.
And what are some of those changes that are most likely to come? And what's the time frame for those changes to happen?
So what we're looking at really is, particularly with Saudi Arabia, for example, which has a much larger population, they're going to have to make some very tough choices on public spending, particularly when it comes to these large investment projects. We can see that capital spending will be really reined in across the region over the next decade or so. And governments will also have to make some much more politically sensitive cuts affecting their own citizens' welfare and government employment, and also subsidy reform. And even then, there may be some thoughts as well turning towards taxation. So that's the picture in the Middle East, and clearly that there is a sort of implications there about a lot of the trajectory for the Middle East will depend on developments on the US shale oil side. So I sort of ask you really how that seems that will pan out.
Well, I think that's one of the suspicions, is that Saudi Arabia and OPEC are keeping the price of oil low in order to drive shale out of business. Now, whether that is their motive or not, and whether they have much control over the price of oil is another question, but the impact of shale certainly will be felt within large parts of the United States and Canada, which are two of the main shale producers. However, I think some of the reports of the demise of shale are overstated and premature. Parts of Bakken, the Bakken Formation, which is in North Dakota primarily, have a break-even point of as low as $45 per barrel of oil. So those will be safe. Most of Eagle Ford, which is in Texas, which is the second largest shale formation, also has break-even points below where we think oil is going to be over the next year. Now, that doesn't mean that shale will go unscathed. There are new formations that are either coming online or were expected to come online, such as Tuscaloosa in Louisiana, which have much higher break-even points. And it seems as if the capital expenditures and the explorations in those regions either won't happen or will be drastically scaled down. So the path for shale immediately is not going to be changed, but the expected gains won't happen. And that's not only in the United States. Argentina, which had been planning on quite a bit of shale in their own country, is unlikely to have that. They're unlikely to be at the break-even point. And not only shale, but also other markets. Certainly in Africa, there are some frontier markets, as they call them, where oil exploration was going to happen, and where governments had eyes on that oil revenue, which won't come about. Then again, in the broader picture, the United States is a net beneficiary of these low oil prices. They are a major consumer of oil, and they may save about $100 billion in the next year from the lower price of oil. Now, that's not only good for them, but also for many other countries in the world that do have large imports of oil. They will be able to rectify their current account balances. So some of those countries where they will have new projects that won't come online are still at the moment importers, and they will be able to rectify their current accounts balances, Tanzania being one example. So it is a bit of a mixed picture, but in the United States, although shale, the industry may take a hit, the country as a whole and the economy as a whole is likely to have a boost from it.
Mm-hmm. And I mean, that's certainly the case in the Middle East as well, where we look at a lot of the energy importers and the poorer countries such as Egypt and Morocco, and they'll certainly be sighing quite a sigh of relief here in terms of their fiscal positions. There's another interesting issue, though, obviously, about alternative energy and the impact of these price declines on that. I mean, for example, in the Middle East, we look at the UAE, and one of their hedges looking forward to a sort of non-oil dependent future is their massive investments they're making in renewable energy there. So I wonder what's going on around the rest of the world. What will the impact be there?
At the moment, it would seem to be negative for alternative energy if natural gas and oil continues to be low priced, and those can be a fuel for the moment. Then again, the price drops in alternative energy have been happening for the last 5-10 years, and they're likely to continue because they're based on technical improvements, and the investments that have been made in them are investments for the long term. This oil price may only exist for the next few years. It's hard to tell. Studies have shown that there's very little ability to predict when the price of oil will spike. And if it is a glut of shale oil in the United States that goes away after capital expenditures goes down, or if it's a slight dip in Chinese demand, which goes up in the next couple of years, you may see that oil is no longer as competitive as it seemed to be at the moment in the next 5 to 10 years. And when you're investing in those types of projects like solar and wind and hydropower, those are the kind of long-term time frames you're looking at. So at the moment, it doesn't look as good for alternative energy as it did 6 months ago. Then again, alternative energy shouldn't be seen in a 6-month time frame. And I think that it will continue, certainly in specific parts, at least in the United States, like in the Southwest where it's pretty sunny, solar will start to become more and more cost competitive. And so I think it will continue to proliferate around the world and become a larger part of the global energy matrix.
Thanks, Chris. And thank you for joining us. And that's all we've got time for from Oxford. Goodbye.